What's up, guys? Michael Edward here, the head trader at True Trading Group. It is June 5th, closing the week out with a strong day thanks to these real cheap oil stocks. VAL, OAS, monstrous moves going into the closing bell. Huge moves on these beaten down, what are now penny stock oil companies. And I started the day red. Today. I'm going to go over with you guys a handful of lessons. We're going to talk about a mental lesson. We're going to talk about a risk management lesson. We're going to talk about my tier trading strategy. And then we're going to talk about reading and understanding momentum. This day, really, I've not really traded that well the last couple days, to be honest. I've been trading. I've been having a little bit of a hard time kind of getting momentum in my P&L. My P&L has kind of been like going like this the last couple of days, for like the last 2 days. So to finish the week with a strong day today, thanks to VAL, which was my big winner of the day, and I'm actually still holding on to a small piece of that position in case we get follow through on these oil stocks because they've been so beaten down. The first sign of life really in a while as oil has gotten back over 35. Bodes well for a lot of these oil companies, and my thoughts are maybe that some of these can start to give us a little bit more continuation on Monday if oil continues. So we're gonna have to keep an eye on the price of oil to dictate if we're gonna get some follow through on some of these beaten down oil names. But these things went absolutely nuts this afternoon. And I'm going to go over that trade with you guys on VAL was my big win. Okay, I caught this move in VAL in the afternoon, and that's what brought me from a red morning well into the green to finish the day with a nice P&L day. And I've still got a piece of this position that I'm holding over the weekend. We'll see if we get some follow through on these on Monday. But let's get into the lessons. I'm going to start off with you guys with a mental lesson. The first lesson, the mental one that I want to talk to you about is the importance of staying in the game and weathering the storm. I came on the mic early in chat this morning after I started the day red, and I was talking to our members, and I said, guys, we had a huge gap up today. Overall markets, huge gap up. A lot of some small caps, big gap ups. And I really wasn't focused on the overall markets in the morning because I just felt like it was such a big gap up that I just didn't know how much follow through we were going to get to the upside. And I certainly didn't feel like shorting the markets on this gap up today. So I actually stayed away from the SPY today, which maybe surprises a lot of people. But the SPY, aside from right here when Trump started speaking, Trump gave a speech today. But other than that, this market was extremely choppy today, which was what I expected with such a huge gap up today in the overall market. So I stayed away from that. And I was looking at some small caps in the morning, and I started red, and I told everybody, guys, you have to weather the storm. I was not trading well the last like two days, and I said, you can't. I started red, and I said, I can't just keep. I'm not going to keep pushing. The market environment today, I didn't really like it in the morning. Was not pleased with the way that I had been trading the last couple of days, and I'm not going to push. I'm not going to keep on pushing if I'm not trading well or if I don't like the market environment. And you guys have to be able to identify that. And that's what I mean by weather the storm. So if you are in a little bit of a funk, that's not when you need to be pushing, increasing position size and pushing and trading very active. Once I started red, I went after two trades. One I was break even on. The other one I took a small loss on. But nonetheless, I was still red. And I'm like, you know what, man? I'm not going to try. I was red yesterday. I'm not going to try to just keep pushing and forcing this. I'm going to sit back, be patient, wait for an A setup. And this is another thing. This is why I trade the whole day. A lot of traders are done in the first hour and a half of the day. That's not me. I trade the whole day. There's tremendous opportunity in the afternoon, sometimes better than there was in the morning. And that's what we had today. Today, we had better opportunity in the afternoon than we had today. And that's what allowed me to bring my red day into a solid green P&L day and to finish the week on a high note. So that's kind of the mental side that I wanted to talk to you guys about that I think is important to help weather the storm and keep yourself in the game. If I just kept on pushing in the morning, my small red day would have turned into a big red day, And then I might not have even traded in the afternoon because I could have been down big. Or if I did trade in the afternoon, instead of me going green on the day and ending with some nice profit, I would have just been making the money back that I lost in the morning. So stick to and focus on risk management, and don't let a small red day or a manageable red day turn into a disaster. That's what I mean by weather the storm. Okay. Weather the storm. Now, that brings me to now my first two trades in the morning. My first trade in the morning was OAS, and I cannot believe I'm about to say this, but I actually stopped out of OAS early in the morning. And to see the move that this stock makes absolutely drives me crazy. But let's just talk about it. Okay. Let's talk about it. OAS gap up today, and I was looking at some of these oil companies because of the move that we saw in oil. And you saw a lot of the airline and transportation stocks have huge days today as the jobless number or new job claims. Oh my God, excuse me, guys. New job numbers is what we got this morning. Okay. It wasn't jobless claims. It was new jobs. There were 2.5 million new jobs created in May, which was, they were actually expecting a negative number. It was such a shock today on Wall Street that's what gave you the huge move and the huge gap up. So I was looking, and you had a big move in oil. So that's why I was actually focused on OAS here to start the day. OAS has a very large short position. I like the daily chart with the big gap up today. I thought if we can get through this dollar level, this stock had plenty of room. So this was actually one of my main focuses here, even though it's a really cheap stock. And I don't typically trade these real cheap penny stocks. It's not usually something I trade, but I had a very specific plan with this OAS. So I kind of read this as a bit of a double bottom. Trade line came into play. And once the trade line came into play, that's what pushed the stock back over VWAP, and you started to get volume increasing. So I went ahead and I actually got long OAS right there at 7551. I'll take you guys to my trade announcements on the day. Okay. Here you guys can see I'm long OAS at 7551. My stop loss was going to be around the 70-cent area, which was right around that double bottom area. I was looking for a trade line VWAP crossover, which we got there, and I wanted to take some profit off in front of the high of the day. I had an order sitting out there at 81 cents. We never quite got to it. I never got that piece of my position to fill off the table. And then when we broke down below VWAP and the trade line, I exited and got flat the position right there at 75. So back to my announcement, you can see here I'm long at 7551. Then I got flat at 75. Basically, break even on the trade. I lost half of a penny. Complete non-event trade. Okay, complete non-event trade. Now, this is an example where I wish I did not move my stop loss up as this trade started to unfold, because had I not done that, I never would have stopped out of the trade in the first place. And you guys can see the rest was history with OAS. So that one stings a little bit. I'm not going to lie, that one stings. But nonetheless, I share with you guys all my trades, the good and the bad. And I ended up stopping out of this trade, break even on the trade, and I actually never got back into OAS. It just ran away from me. I was bidding right down here in OAS coming into the afternoon. We never got down there, and the stock just took off and never looked back. Then I was bidding right down here in the afternoon. We never got to my fill, and the stock just took off. So I tried getting into OAS twice in the afternoon. I never got it. The thing just completely ran away from me. That was OAS. So I'm still like break even now on the day. Then we have XSPA. XSPA, guys, again, very similar setup or idea to OAS. Yet a double bottom here right as the trade line came into play. And I read this as a lot of strength at the trade line. That double bottom and then shot right back up there towards VWAP. That's a big bounce on XSPA. And I read that as a strong area of support. So I'm looking for the trade line to continue to be support. And I got long, okay, XSPA right there. Take you guys back to my announcements. Long at 270. Okay, long at 270. All right, as we pan this over, we start to climb higher. We get a trade line cross. I take 25% of my position off in front of the high of the day, like I planned to always. And you can see here, took some profit at 288. So long at 270, so 25% of my position at 288. And then we rolled it over, broke down below VWAP, and I got flat right there at 262. Back to my announcements, sold out remaining XSPA at 262. Okay, now the lesson to take from this is risk management. This is my tier trading strategy. Okay, typically when I enter a specific trade setup or a pattern that's well below the current high of the day, I usually set my first take profit target, which is where I sell 25% of my position. I usually set that in front of the high of the day. In case the high of the day does not break, I don't want to be sitting in full position, caught in a double top pullback. So that's why I always take 25% of my position off the table in front of the high. And in this case, it saved my ass because you can see XSPA fell apart. But when this falls apart, fails, and I get stopped out the rest of my position, it's not a big loss. I'm not getting hurt on any of these trades. Okay, I'm long at 270. I took some profit at 288. Then I'm flat at 262. It's like a non-event. Okay, this is what allowed me, my risk management on these two trades is what allowed me the opportunity to finish with a nice P&L day by making one winning trade in the afternoon. One winning trade in the afternoon, and I'm walking away with a solid P&L day because I'm managing my risk. I'm keeping my losing trades small earlier in the day. Okay, so this is where my tier trading strategy comes into play. You guys, if you're not familiar with my tier trading strategy, you will learn it as a member of True Trading Group. It is something I teach all of our members. I learned it when I worked at a hedge fund. That's where I experienced and I learned how to trade in tiers. It is an amazing, amazing, amazing trading style. It's my absolute favorite. I would never trade any other way. It's specifically designed to help you keep losing trades small and to help you stay in winning trades longer. That is what the tier trading strategy does. There's an entire chapter on the tier trading strategy in the courses. All of the courses are included for free with a membership to TTG. If you guys are interested in getting all of my courses, I wrote them all myself. It's a simplified version of the education I received at the hedge fund. Click on the link in the description below and use the coupon code TTG620. That'll get you a 34% discount on your membership to TTG. Prices are going up in July. Okay, so make sure you use that coupon code to get that discount. All right, so now that takes me to VAL, my big win on the day. Okay, my big win on the day. Now, as you guys already know, we already discussed, I stayed patient the rest of the day. I wanted to keep my red day very manageable and go into the afternoon looking for new setups. I'm not just doing nothing, twiddling my thumbs during lunchtime, guys. I'm going over setups. I'm looking at stocks that were strong in the morning, that are holding above key support levels during lunch, that have the potential to give us an afternoon move. And I saw OAS. I then saw VAL, and I liked the setups for potential afternoon moves, especially with the strength that we're seeing in oil. Okay, so VAL coming into the afternoon, 2 o'clock. 2 o'clock comes right at 2:15, bang. We break through the high of the day. We break through the high of the day at 2:15, perfect timing. Lunchtime is typically between 12 and 2 Eastern. Right after 2 o'clock, bang, we break the high of the day, but heaviest volume of the entire day on that break. That's when I said, okay, guys, we're going to get some follow through. I'm looking to get long VAL. Now, again, I'm bidding VAL right down here, trying to get a retest of 65 cents, that prior high. That's where I was going to get long. We never even got a pullback to retest that high. That's how much momentum there was on this name. Then you can see as we extended through highs, you can see the volume continued to increase. Heaviest volume of the day on that extension. Notice the trade line support. Okay, so I said on a pullback, I'm trying to get long right in front of that trade line. That's exactly what I did on that pullback is where I got long VAL. Take you guys to my trade announcements. You can see here 2:41 in the afternoon. I'm long VAL at 7782. Okay, 7782 is where I entered VAL right here. That trade line holds just as we expect, and bang, you get that extension move to new highs. And right here, I take 25% of my position off the table at 8718. Okay, 8718. We get a little bit of a pullback, then we continue, we squeeze up higher into the afternoon, and the bulk of my position comes off the table right there at 935. So from 7782, bulk of my position off the table at 935, and I'm still holding 25% of this position in case we get some follow through on Monday. But even though I only sold 75% of this position, this one trade, realized profit, finishes me well into the green with a solid P&L day because I kept my loss small in the morning and I kept my red day extremely manageable, and it only took one to get me back into the green. Not just break even, back into the green. And that's where risk management really comes into play. If you guys want to be consistently profitable traders, you have to start focusing more and learn how to go about your trading, worrying more about how much you're going to lose if you're wrong. You work on making your losing trades smaller, your P&L will automatically increase, even if your winning trades stay exactly the same. Just reduce the amount that you lose when you're wrong, and your monthly P&L is going to jump big time. Okay, a lot of people have a misconception with the way for you to make more money trading is to have bigger winners and take bigger position size. That's actually not true at all, anywhere near what the actual truth is to becoming a consistently profitable trader. If you want to make more money or be more consistent, you do not necessarily need to win more or win bigger. You need to make sure that you lose less. It's not even a matter of winning more or losing more as far as percentage wise. It's not about your win rate. You don't necessarily have, like, let's say right now you're a 50-50 trader. Let's say you're right 50% of the time, you're wrong 50% of the time. That's typical for someone that's just kind of trying to find their way, that's learning how to trade. Newbies are anywhere from maybe 30%, 40%. Then you're trading for a little while, 50%. But once you become consistently profitable, you're like in the 50 to 60 range. You're kicking ass 60 to 70. Anywhere over 70, you're a professional trader. So let's say you're a 50-50 trader. Okay. You don't necessarily need to become right 55% of the time or 60% of the time in order for you to make more money. Okay. You can actually still stay 50-50 and make more money, because if all you do is just make your losing trades smaller, that's going to mean you're going to have smaller red days, smaller red trades, and that's going to equate to more green days, which makes you more consistently profitable and a higher monthly net P&L number. That's the right way to increase your P&L, guys. It's not think bigger win-wise, it's think smaller loss-wise. And you have to be able to get your mind to start thinking that way, because every successful trader is more concerned with how much they're going to lose if they're wrong than they are infatuated and obsessed with how much they're going to make if they're right. You need to have that same mindset. Okay. So that's it, guys. Good way to finish out the week. Again, use that coupon code TTG620. Click on the link in the description below. Get that 34% discount. And I will see you guys all in chat on Monday. Take care.